Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. Dania, thank you for taking some time to join me on the podcast today.
Thanks a lot for having me, Owen. Very excited about it.
Yeah, it's going to be great. I must admit, when I was doing some research into you, I watched a few interviews that you'd done either with the Wilson team or elsewhere, and I was just thinking, you sound like you've got a really interesting backstory. And even now, you know, you're involved in alternative assets and alternative investments, which is it's just fascinating to me. So there's a lot I want to get through. I want to explore a bit about your career and how you think about portfolio management, construction, and asset allocation and those types of things. But there was one line, and I've got it here, which said that Dania commenced her investment career as a foreign currency trader working for a bank in Russia before joining Russell Investments in the UK as a real estate investment analyst. So I'm just thinking there must be so much that, and I looked at your LinkedIn profile and I saw things that you'd done in the past, and I was thinking, wow, like all around the world, every asset class, it seems. And I probably can't capture that all. We probably can't capture all of that in one conversation. So I was thinking, there's some stories that you might have, or, you know, lessons learned over your career at these various points that you can reflect on now and maybe share with us? Yeah,
gosh, lots of lots of stories. It just sounded so funny when you when you talk about that journey. But I do get this question a lot, you know, and I do get other questions on top when I say where I'm from. And often people don't believe me because I don't really look like, you know, my other peers from my homeland. But, you know, what comes often to my mind when I think like about certain turning points that shaped me as a person, shaped my life. And one of the first ones often is my passion for reading. So it started really at an early age. And my dad, he always collected books. We have a huge library at home. And there was a period when I got into science fiction, and one of my favorite writers still is. So he has this story called Fahrenheit 451, and one of the characters there says, stuff your eyes with wonder, leave as if you drop dead in 10 seconds, see the world, because there is nothing more beautiful than this experience. And I think, you know, it sums up a lot in how I went through my life. And plus my childhood was very, you know, intellectually stimulating. Yeah. I would say, like, I'm the communism. And I was, you know, I still got into this period of like getting the Lenin star, and then the, like, you know, the pioneer tie. And then when I was 10, perestroika happened. So what was 1990? And basically our lives just changed. And the change happened so quickly. And I think for me, you know, and for other of my peers, it was a stimulating experience, you know, because that also meant the borders opened and we could finally travel. The school program changed, like what we're being taught at school. the accessibility to various literature and information has changed. So it was like an opening into new information. And by nature, I'm a very curious person. I love learning. So, that experience growing up in that very, historical phase helped me seeing maybe things that some of my friends, in the UK, in Europe, in the US, they don't necessarily see, or they haven't seen it because they just grow up different with different experiences. And, from there, it really started. I wanted to travel. I wanted to discover the world. I wanted to learn different languages and cultures. And I somehow went to a school, and that was before Perestroika. I went to a school that was a school for German families in my hometown. So half of the subjects were taught in German, and that was my first foreign language. I started it when I was 7. And, from there, I'm spending a lot of time. From there,
That's good.
I traveled a lot. I went nearly every summer throughout my school years to Germany to continue improving my language skills. And I learned a lot what was happening in Russia at the time in terms of political changes, economic changes. And really what grabbed my attention was this huge change within the financial system or banking system. And at that time, that was probably, very common for many former USSR republics, that you had very centralized Russian system centralized banking system where you'd have central bank and then, government saving bank and bank for international trade. And then after Perestroika started changing and we had like new private banks popping up like mushrooms and then they would disappear within a week. So, it was all very interesting to observe that when it came to making a decision what I want to do, or like where do in terms of continuing my studies after school. After, discussing it with my dad, he really encouraged me to look into finance and banking because it was really one of the sectors at the time that was going through huge evolution, through huge change. And it was actually really interesting to watch it and be part of it. And, that was how I made the decision. And I had, to be honest, at that time, no idea about investing or banking or financial sector. I loved literature and languages. So it was like, moving into a new world. And I really loved it. I loved it. It opened so many doors in terms of new areas to learn about. And I quickly realized that at the same time, like I wanted to continue studying abroad. So I did go and, did like an exchange year in Germany at the university. So that all laid a bit of a foundation. When I go back to your initial question, how did you end up here? I think I always wanted that challenge. I wanted that experience challenge. I wanted that intellectual challenge to feed my curiosity. And, it was a long road, and not necessarily I was making proactively every decision about moving to different countries. It's sometimes, just life leads us through, you meet people, you start about new experiences and things start happening. I wouldn't claim I meet nowadays incredible young people who know exactly straight after the uni what they want to do, how they want to do it in a very structured way. I was nowhere close to that. It all came over time and still evolving. But look, and for me, I had opportunity when I completed the studies in Europe. I had this opportunity to go and do 3 months training program with Russell Investments, and that was at the time in the Tacoma office near Seattle. So I did spend 3 long rainy months living in Seattle and commuting to Tacoma. And that really gave me such a good insight into other asset classes. So just thinking more broadly about like global equities, fixed income, and then alternatives, that was probably the first milestone that also shaped me in terms of what I really found interesting, what I wanted to learn. I would also add, just reflecting back on the experience, having around me really strong role models helped a lot. I only now perhaps realize the impact that those people made on me. And, one of those moments was when I started, just after the university, I started working for a privately owned bank in my hometown back in Russia. And the CEO, CIO, and CFO were all female professionals, which was very, very unusual at the time. And to me, it was more like an inspiration. It's all possible. You don't have to feed into that social model at that time where, a woman would take on the role of, building out the family and raising children, that there was more to that. And it was possible to achieve that by working with those women. I really realized it is possible and it is possible to have it all. So that was kind of another, incredible experience that I had when deciding on my next steps.
How many languages do you speak?
So I speak German. That's like, my favorite. I love German. I speak Russian. I speak some Tatar. So my ethnical identity is Tatar, which is a very, very different language from Russian. And I speak Spanish. I can speak a little bit of Italian. And, I would, if I had time, I would love learning more.
We obviously speak English as well.
I speak English, yes.
Wow. Have you got... So for someone that does not speak any other language other than a very broken amount of Polish, have you got any strategies for learning languages? Like, is there anything that's worked for you over the years?
To me, it was about building the foundation. So, basically, I'm a very, I always need structure in the head and in the framework. So I always start with understanding the foundation of a language, the alphabet and the grammar, and then building out on that foundation. And the best way to build out is to actually go and live in the country and, have friends. Like the reason really, I remember I decided, I want to leave to learn Italian, because when I lived in London, I shared a house with my Italian classmates from Torino. And it was inevitable for me to start picking up Italian. And then I went for 2 months to live in Italy to do Italian course, because I just wanted to be, I wanted to speak Italian to them, and I wanted to read books in Italian. And yeah, it's...
So you said you're a very curious person. And if you speak, say, 5 or 6 languages, I don't know how you couldn't be curious. How, like, how about then, one of the questions that I wanted to ask you was engaging people in, like, I guess, people from all walks of life is really interesting to me, and how we form teams. And, teams are quite interesting because I think one thing that I've had drummed into me over the years, Dania, is that it's important to get so many diverse opinions, but you also have to be joined at the hip by a philosophy, because you can all be different, but if you're all going in different directions, then it doesn't make that much sense. So maybe I'll just throw it over to you in terms of how you think about the benefits or pros and cons of having and building a diverse team.
Gosh, that's question number one when you think like governance and culture, and it's such an important area for me, more like even if I think from the investment perspective, and we can talk later in terms of how we invest within WMA, but we do work closely with our investment partners. And so for me, that's often one of the first questions that I want to understand, who are the people in the team, and, how much diversity there is in terms of the experience, background. Because the reality is, Owen, that when you have a very, very plain team, like let's say it's, let's talk about one of the 4 top business strategy consulting firms. They would have very lean profile in terms of the people who work there, and they tend often to breed people from graduate positions up to the partners level, and there is a purpose for this, because they wanted to be very effective and streamlined when they work on a project. And the reality is it's easier when you have teams that think alike and come from similar backgrounds. In terms of managing teams like that, it often may come across, well, that's just easy. We'll just hire people who are similar to us, who think the same as us. And it's often uncomfortable. Any change, right? Like any change for anyone can be really uncomfortable. So when you start bringing in people who are from diverse backgrounds, cultural backgrounds, nationalities, experience, work, etc., you do need to understand why you are doing this. What's the purpose of this? And then, as you said, to have very well-defined core beliefs and mission statement to make sure everyone in the team understands where we are going and what's driving us. And it's it even goes, I've been spending lately, past few years, a lot on the subject of neurodiversity. And that comes more from the personal experience. One of my older sons, he's autistic and he has ADHD. And, this whole topic of neurodiversity, it just fascinates me. Again, very curious to learn about new things. But seriously, it's an incredible area just to think, well, by including in our teams, within financial industry or without tech, within other industries, and going even beyond what we just discussed, but also thinking about how different brains might work and what benefits it brings. All this, the diverse team equals best results, but it needs to be very carefully managed. And one key element for success here is mutual trust and respect. When there is no trust within the team, it doesn't matter how diverse it is, but this mutual trust and respect is like a binding glue for any team. I'm so passionate about the topic, so I can talk for hours. You need to guide me.
Well, so I've brought this up once or twice on the show, but the way I think about companies is as if they're just like tribes, because I'm a huge fan of the book Sapiens. If you've read that book, and in that it talks about how, like, for example, property rights. So just the concept of law and order, right, is actually, it's a made up thing. It doesn't exist, right? It doesn't actually exist. It only exists because we believe it exists, right? And the only way we know that it exists is because we communicate with each other. So we communicate between us, so we have an understanding that there is law and there is order, because if we don't follow that law and order, something will happen. It's a story that we tell each other, right? And so to your point around communication, effective communication is vital for that very reason, because without the trust, you don't know which direction you're going, right?
No, absolutely. And I've been like specializing all most of my career in alternative investing, and I do think it's quite a distinct area compared to other more traditional asset classes, even in the way investors think within private equity, real estate, infrastructure, in like the way they communicate is so important. Because let's say if you are an equity investor, literally tomorrow, and maybe you are already doing it, you invest an X amount of money, you build out your portfolio, nothing really stops you from building a very successful portfolio. If you have a good understanding of the market, some technical skills to understand how to analyze the companies and, read the macro fundamentals. But I always think within, let's say, infrastructure, there are so many complexities, even within each of those asset classes, and so many various groups involved in ensuring this asset is taken from, let's say, greenfield development asset down to one of the best performing assets 5 to 7 years ago. It's also very long term. So I feel in the area where I've been working, this, effective communication, active listening, and the ability to connect all those subgroups and the complex concepts, connect them together, that was really important to learn over time. And it's also, honestly, I worked in a few countries, and it's so funny, but every time I would say it is such a small industry. It's such a small industry. It's incredible. I would still sometimes like bump virtually or even physically in Sydney with some of the either ex-colleagues or people I met when I was in the US. And it's just, it's a much smaller industry. If you think we currently have 100 trillion US dollars of assets under management globally, that's for asset managers, I'm not talking about asset owners. It's about about 30 roughly is in alternatives. So it's only a fairly small portion of that huge market is in alternatives. So it is a small world. So kind of just closing the loop by saying that relationship, effective communication in alternatives is extremely important.
I was actually going to ask you this question later in the show, but I'll do it now. I was actually chatting to a venture capitalist yesterday, and you've got a glass of water there in front of you, Dania. I've actually got a cup of coffee, but you can't see in the glass. But for anyone that's listening, I want you to imagine that there's a glass of water. It's half full, and you tip the glass to one side, and it creates like a wave that goes up one side, but then it comes rippling back the other way and hits the other side of the glass. And this is how the venture capitalist spoke about people that start early stage companies. And he was saying that basically there has to be something that drives them off balance to do something out of the ordinary to achieve the results that they want to achieve. And I just thought that was a really interesting, I guess, anecdote or example of how you get in your words, maybe so to say, people that may be neurodiverse, that have some sort of, whether it's anxiety or something that triggers them to go and do something really interesting and really fascinating that's outside the norm, which is just fascinating to me. I just love that. But my question was more so around, I was sitting in the conversation with him yesterday, and he's one of Australia's best venture capitalists, or at least that's what everyone tells me, Dania. Mm-hmm. I'm quite new to it, right? He's super successful if you look at the companies that he's invested in, right? But I was sitting there thinking, if I was an alternatives investor like you are, how do you judge a venture capitalist? Like, we're judging the funds or the venture capitalists who judge the earliest stage companies, right? So this is like at the pointiest of the pointy end. Yeah. And you're making a decision on if this is a good venture capital fund or investor that I should back. How do you think about that?
Yeah. So look, I think to start with, Australia or Australian venture capital would be still, or I would say it's still in that baby stage, baby age, compared to, let's say, US or even European venture capital sectors, because realistically in Australia, we don't really have that many venture capital fund managers who went through at least one cycle of fully realized portfolios. So often when you go and look at various venture capital players here, you do find this tendency of rolling portfolio companies from one fund into another by giving them time to continue growing, to further capital raisings, fundraisings, etc. But there are not that many that have been fully realized. So for me, looking at this, I do get quite nervous when I don't have the data on realized track record. And for me, talking about performance of the existing portfolio companies within venture capital is not, it does not necessarily give me the full picture of what's your skill set on executing strategies like venture capital. That's the first point. The second point, within WMA portfolio, there is some exposure to venture capital, but my intention is really to fully exit those positions, and I haven't been making any new allocations. Why? Because that's probably one asset class within alternatives that has the highest beta, equity beta.
Yep.
So if you think about this, from the bigger picture, why do you want to invest in alternatives? Right? Like if you want tomorrow to go and invest outside equities or fixed income, you want private equity, real estate, why do you want it? And one of the key reasons often is looking for more diversification within your portfolio. So you do want to see asset classes that don't have such a high equity beta. The reason venture has high equity beta because the main exit point for venture capital deals is to go through IPO. So it's inevitable the equity valuations will spill into venture capital. Whatever is happening within the listed equity markets will, impact venture capital valuation. So, for me, it hasn't been really an area where I would say I am going to invest more capital, or I really want to invest more time to find the best in class. And I'm sure there are, excellent people, and I met some incredible people from Australian venture capital sector. I'm more thinking, what I want to achieve with WMA portfolio and what do we stand for when we talk to our shareholders. And it's just not the most natural fit within the portfolio.
Yeah, that's fair. Interestingly, do you think, just maybe one little follow-up question here before we move on from this, but do you think, so would it be fair to say that one of the key risks in venture capital then is the exit?
It is absolutely one of the key risks. Sorry, I was just thinking, what is it like? What I would say, like the risk that you'd assess before thinking about the exit, and obviously that's the whole skill set in terms of how you source the deals, how you identify the deals. A lot of this, Owen, is about people's skills.
Because it is, yeah.
You are basically often backing a founder or 2 or 3 founders, and you really have to buy into those people or into their ideas, into their businesses. So that would be like the first area where you assess the risk. And then, yes, the second, that's a huge risk, is what are the exit options? It's worth remembering, and I do know this asset class often gets a lot of media attention because it's an exciting area, right? Like, it's exciting area, and you expect some absolutely stellar returns. So important to remember that any venture capital portfolio would have very high dispersion between losers and winners. And often, the general rule of thumb is that you'd have 70% losers, and then, if you're lucky, 30% winners within the portfolio. And so, I often say, look, you just need to know your own risk appetite when you think about investing in this asset class.
Yeah.
If you can take this risk, absolutely go for it. But if you can't, then, it's not the right fit. I do get questions like in terms of the timing, what's happening with venture capital, because obviously last year there was a lot of capital raised by Australian venture capital. I think, record like over $1 billion dry powder, which is like a record for the Australian market. And many investors, for obvious reasons, got very nervous about late stage venture capital. There were also quite a few pre-IPO strategies in the market. And, when I think about this asset class from the opportunity set perspective, I do think investors will continue finding some really great deals at the early stage, because venture capital is very long term. It's longer than private equity. It's unreasonable to expect that you'd realize the deals within 5 to 7 years period. It's usually 10, 12, or even sometimes longer. So it does take time, and finding those businesses, founders, startups in sectors where you see strong structural tailwinds, absolutely. But then, it comes down again to your risk appetite.
Absolutely, it does. I was reading before we hit record. I was reading like media releases and things that you'd done, and I noticed at June 30th, 2022. So this is a little while ago. Just give some reference to folks that around 42% of the WAM alternative assets portfolio was real assets. 25% was private equity, 5.5% was real estate, and 28% was cash. But there was a particular quote in there, and sorry to quote you. Sorry to quote you in the podcast, but you said the uncertain geopolitical and macroeconomic environment experienced during the 2022 financial year presented a strong case for investing in alternative assets that provide diversification benefits and downside protection. End quote. And obviously, like you talked about, like correlation in the portfolio and equity beta and things like that before. I'm curious to know how much I guess, the top-down macroeconomic picture affects what you do in the portfolio. And the reason I think maybe we should add some context here, Dania, on how the portfolio is constructed generally anyway, just to give people a sense of what's inside it. Because I think when we're in really liquid markets, right, we can change pretty quick within maybe a week or two. But for you, that may be a bit different. So maybe you can set the scene for what the portfolio is and then how that is informed by the top down.
Absolutely. Yes. No, that's a great question. I love, portfolio construction area. Find it really interesting to think about. The goals, like what are our goals? What are we delivering to our shareholders? For me, it's always like the starting point, Owen, is always, what are your investment beliefs, right? Like, what do you believe in terms of when you invest in XYZ? Do you expect excess returns over, let's say, equity benchmark? Do you expect certain amount of risk? How much liquidity? How much actual illiquidity can you take within the portfolio? What about your geographical exposure, sector exposure? What are your ethical or impact investing beliefs? What are your ESG reporting requirements? So I always like taking a step back and thinking, right, so who are our shareholders? Talk to them, understand what are they looking for? And of course, it's not always possible to meet every single shareholder request because we have over 4,500 shareholders in WMA. So, but building that knowledge on their feedback, on their questions is really important for me. And basically, when I think about WMA portfolio, that's a one-stop solution for an Australian retail investor who wants to add diversification to their investment portfolio, who wants to get access to diverse portfolio in terms of sectors, strategies, and megatrends. And I can talk about this in more details in a second. And who is looking for some upside, i.e. capital growth over time, but also at the same time wants to see fairly stable, regular income stream. So this to me, this is like a checklist, like a shaping list for the portfolio that I want to construct. So I always start, okay, long term, I want to see about 40% of the portfolio invested in more income producing strategies. And this could be core infrastructure, core real estate, private debt, some of the real assets like water rights, they would serve this purpose. And they are very long term. You expect the yield, in particular in asset class like infrastructure, to be fairly predictable. It's just based on the nature of the contractual revenues that assets have, very similar to some of the core real estate strategies. And private debt is an interesting one because you basically also see this asset class as a natural interest rate hedge, right? Because most of the time within private debt, deals are structured as floating rates. So as interest rates rise, you expect your running yield will also rise over time. And then the rest, about 60%, would be invested in growth part of the portfolio. And in growth part of the portfolio, you include equity, you include more opportunistic strategies with a high risk within infrastructure, real estate, real assets, et cetera, et cetera. So that's, for me, more about the risk return profile. I do want to see some inflation protection within the portfolio, in particular in this current environment, but also long-term. And alternative assets, they are excellent in delivering it within the portfolio. Again, not all, like private equity probably would be the lowest chance of delivering inflation hedge, but something like, let's say, healthcare real estate, usually you'd look at the assets where a tenant is, public or private hospital, and the lease would be very long. It's usually 10 years plus, and typically it would have annual CPI increase. So perfect inflation hedge, right? Like very kind of secure, stable, growing with inflation. I also see alternatives as an area where investors can access sectors and themes that are otherwise are not accessible in fixed income or equities. And if you think, Owen, about our Australian equities market, where is it all concentrated?
The banks, resources.
Yeah. Exactly. That's it. That's it. But it's literally the two areas where we have the highest concentration within the index. So if you are an investor, and we're talking, I'm talking broadly about retail investors, moms and dads, people who are close to their retirement age, they would perhaps choose to go passive sometimes, not necessarily going active, and just having exposure to one asset class with high volatility, with such a concentration within the sectors, doesn't really give much room to think which trends I can access or I want to access. So to me, having this very clear view on long-term macro fundamentals is really important. So I call it like megatrends, but we can call it macro trends, but in other words, it's basically the trends that we see within our economy and society that have very long-term, strong tailwinds. And I focus on the four where I really have the highest conviction. One is the growing aging population. Very, very hard to argue with that. All the statistics that show that our population will continue aging, which also means this puts enormous pressure on the existing healthcare system. Excellent sector for alternatives, right? Because you can invest in healthcare through real estate, you can invest in healthcare through infrastructure, you can invest in healthcare through private equity. All those routes are available. And to me, it's an excellent trend because it's very likely to continue long term. The market is definitely undersupplied, but the demand keeps growing. So there is a lot of room for further growth, further improvement. One example. Second would be climate change. And it's, again, the theme that's very hard to argue because by now we already have the actual statistics, the actual facts showing us that we are experiencing more frequent extreme weather conditions and events. And, the 3 years of La Nina in Australia is very unusual. It is very unusual because usually when we look at the interchange between El Nino and La Nina, it kind of used to happen within every 18 months or so. And we've been 3 years into this period of increased rainfall. And there are many other, like you just open the news and every day you'd read something is happening around the world. So to me, what does it mean? I look at this trend and I think about renewable energy, infrastructure. I think about new technology connected with energy transition that can be accessed via private equity. I think about sustainable agriculture that can be done through, building energy efficient greenhouses, et cetera, et cetera. The third one is digitalization. And it's, again, something that, I've never met anyone so far saying, like, what is this trend? Like, it's non-existent. Again, we are very unlikely to go back in terms of pre-pandemic times. I really see the period when we were going through the COVID, it accelerated the trend enormously, where we really felt technology affected every aspect of our life. Work, food, health, children, like everything was suddenly connected with technology. Yeah. So again, Owen, it's a great opportunity set within alternatives to tap into technology. So we just committed recently capital to one very exciting deal that actually supported by both trends growing aging population and technology. So we'll be announcing it soon. And then the final one is increasing demand for food. It has been there for a while, and it will be there for a while. If you look at the world population globally, we just hit 8 billion, and the scientists were predicting that we'll hit that number by 2030. It's all going more rapidly. It's all going into the direction and at a speed that no one really expected, no one predicted. And again, for me, it's one of the themes that I can invest in through agriculture, through water rights, private equity, real estate, if I think about, industrial last mile logistics and the whole supply chain. So in other words, when you think about portfolio construction, there is no one element that you think about, this is the most important one to look at or to assess when you construct the portfolio. It's understanding, the investment beliefs, understanding the investment goals of your investors and, what they want to achieve by investing in that portfolio, but then also positioning that portfolio successfully long-term. Successfully long-term. I've been thinking before we met today, I've been thinking about one of your questions was about, personal style of investing, something like a lesson learned, or what events shaped you, being who you are, like in the way you invest. I am quite unusual probably within alternatives that I do spend a lot of time assessing the risks and assessing the downside. To me, this is so important. And it could be, I don't know, like some studies say, female portfolio managers, they just tend to spend much more time on assessing the risks. But I also, when I think back, I experienced at, fairly young age how, one political or financial event can just wipe out your, wealth, your assets, everything you have. And to me, it was always about not focusing entirely on the upside, which if you think about, venture capital, private equity, they focus a lot on the upside. And then if you think about private debt investors, they tend to focus a lot on the downside. So I'm probably more in the group of when you talk to someone who manages senior loans, they'll be spending a lot of time assessing the risks. This is really important to me. And I think it's not just from what I learned in my professional career, but it's also what I learned through life, experiencing those extreme events. So within the portfolio, again, I would focus a lot on quality across the asset classes, rather than looking what's the maximum upside that I can achieve.
Yeah, I like that. There's so many books that profile great investors say that the first point of call is the risk, knowing your downside before you calculate your upside, right? And so many of us just skip straight to the second bit because it's more fun. So just to recap there, I wrote down the four that I guess trends or megatrends, which were the aging population, climate change, digitization, and food demand. I mean, they're all so interesting. I obviously, being inside the listed investment company structure helps because you can offer what is traditionally for institutional investors only or wholesale investors only. You can offer that to a retail audience and via the exchange, which is fantastic. I'm curious though, how many transactions do you normally make in a year? And the reason I ask this is because the ticket size is usually pretty big. So as far as I know. So most portfolio managers, there's a really interesting study that I came across a little while ago that showed that the average portfolio manager holds a position, this is equities only, for about, I think it was about 7 months, which is I think that's quite short term, but I'm just curious. So how often do you make a decision or change the portfolio or expect to change it?
Yeah. Look, it's such a good observation about the equity markets, but I'm not going to go there. Okay. But within alternatives, it's basically, everything happens at a much slower pace in terms of deploying capital, closing a transaction, conducting the due diligence. It's all, slower, and I don't want to say it, but I'm going to say it, much more thorough, because it's illiquid, right? It's illiquid. Once you invest it, you're going to be there perhaps for 5, 7, or maybe longer years. So you do need to ensure you do your proper thorough investment due diligence. You check all the potential red flags before you commit your capital. So all this work upfront, it does take a lot of time. When I think about WMA portfolio, on average, it would be 3 to 4, sometimes 5 investments per year. So if I think about, the last 2 years in terms of the exits, i.e. the matured investments that we sold, we had about 8 exits. And then in terms of the new commitments, it would be 6 that we finalized, and there will be another 3 being finalized by the end of the year. So, and that's over the period of 2 years. Plus, on top of that, Owen, you'd add that if you commit your capital tomorrow to, I don't know, the next venture capital fund by Blackbird, it doesn't mean they're going to deploy your capital immediately. You might be sitting on your capital for another, 24 months before they call this capital from you. So very much, kind of a slower pace, but also something that would require a lot of patience. There is always this rush to just go and get the capital to work. You really don't want to do it with alternatives.
Agreed. I'll put all the links in the show notes so people can go and check out the WMA, the WAM Alternatives portfolio, and see like your latest insights and all that type of stuff, as well as a bunch of videos. But I thought I'd just ask one final question, Dania, if I may, which is just, this is a thought-provoking question, which is, what's one thing that you believe about investing that few people would agree with you on? I mean, there's probably a lot, but you're an alternatives manager.
Well, what is yours?
Well, I actually don't have a fully formed response to this, but I can tell you one that I did hear, which I was just like, oh, that's very interesting. Which I was in Sydney a few months ago, and an investor told me, he said, I believe the stock market should be closed 4 days of the week and only open once. And I thought that was really interesting, because I was thinking, yeah, it would just like, think about how much more productive so many people would be if they just spent the other 4 days of their week doing something else. I'd probably be out of a job, mind you, but I just thought that was really interesting. I can't remember what Jeff said either. Jeff Wilson. I can't remember exactly what he said, but I'm sure someone listening to this would. Yeah. But I'll have to take it on notice. I put you on the spot, but I'll have to take you on notice, because and send you my answer via email, because I can't think of it right now.
that because like it's not, it's not an easy one. It's not like something, I don't know, I'd be kind of answering immediately. But I would say one is, I want to say, doubt the facts, doubt your knowledge. And I think that many people, like many other portfolio managers, they would disagree with me, because there is very common belief you have to have really strong conviction when you make investment decisions. Now, when I'm saying doubt yourself and doubt your knowledge, what I mean by that is look for more. Always look for more information. Always look for more input in terms of the analysis, and understand how it all connects, all the pieces of information. Because once I am in that state where I feel I'm 100% convinced, this is where I risk losing some of the most important factors when I do my analysis.
I think that's fantastic.
Thank you.
What do they say?
Up with it.
No, I'll put you on the spot, and that's great. So what do they say? Strong ideas loosely held is probably the good one. I think that's so true. Like the famous quote, I change my opinion when the facts change, or something like that. It's so important for us to change our minds, but we're taught almost as a profession, Dania, that you have to have conviction because that's how you instill confidence in your investors. But investing is just a perpetual learning journey, isn't it? So the only way you can do that is if you're constantly open-minded. So I really appreciate you taking the time to join me remotely.
I enjoyed it.
I'll follow you up. When I have an answer to that question, I'll send you an email and say, this is my answer to the question. But I hope to meet in person one day. So thank you for taking the time to join me on the show.
Thank you very much, Owen. Nice to meet you.